Hey guys, Sniper Doofus back, and so all we're gonna do in this video is just go over the most basic stuff in trading Forex and go over my strategy just so you guys can do it too. Anyway, let's get into it. So pips is like just the value of what they use in Forex, and so if we look at the 8 for example, we can see that that's a single pip, and so any change in that number would be 1 pip. And then the 3 is 30 pips, the 5 is 500 pips, and so let's say that 3 changes to a 4. That means you would have gained 10 pips if you had bought in. And then if you see this 5 change to a 6, then you would have gained 100 pips. And so this is normally what you see in these in these 5-digit numbers, but some currencies will have a 2 decimal position, such as USD JPY. And so we can see here that the furthest number on the right would be the single pip, and then everything else is the same. So the 8 would be 10 pips, the 3 would be 100 pips, and so on and so on. So that's really it for pips. Alright, let's get into candles. Candles are so simple really. A candle just looks like these photos here on the top right and on the bottom right. The bottom right is from a real chart, my own personal charts. Anyway, so the big chunky part in the middle is where it opens and where it closes, and then the skinny parts on the top and bottom. So the bottom skinny part shows the lowest point that it reached during that time frame, and the highest wick, so the skinny part, is the highest point it had reached. And now each candle represents a certain time. So on my chart here, I've selected it based off of the 1 hourly chart, and so each candle there represents 1 hour. Okay, so now getting into trends. A trend is the overall movement of the market. It can go up to the right, down to the right, or sideways to the right. The market will never ever move to the left, okay? And unless you turn it upside down. Anyway, let's just have a look at what they look like on real charts. Alright, so let's have a look at some real examples. So if we take a look at this Swiss against the Japanese yen, we can see that the overall movement of the market is going up and to the right. That's it for that one. Let's have a look at USD Swiss. We can see that this overall market, if we just zoom out a bit, from here to here, the overall market is moving downwards and to the right. And also if we take a look at this one, our third trend, we can just see that it's not moving up, it's not moving down, and it's simply just moving to the right. And that's all there is. Those are the 3 trends, and that's what they will look like on real charts. Alright, so continuing on, we're just going to have a look at some terms that are used quite commonly in the Forex market. So the 2 words are structure and reversals. Structure is just a term used for the overall market and where the candles have been. And so if we take a look at the photo that I put from my own chart on the bottom left, we can see that there's quite a strong uptrend structure. And so that's simply how that word will be used. And you'll also hear me use it in my analysis on Twitch and that sort of stuff. And also the other term that we can see a lot is a reversal. And a reversal is a point at which the structure will go from an uptrend and then into a downtrend. And so let's just have a look at some examples. Okay, so we're back on trading view, and we can see that there was this pretty big uptrend here. And then now we can see that it broke this uptrend structure, and now it's starting to form a downtrend. And so this point here would be point of reversal. Alrighty, so getting into support and resistance, this is like the most important thing really. It's like the key fundamentals of trading Forex. Okay, so resistance is a point that the candle cannot pass as it's moving in its current trend. And a support is the level where the currency will hit and then turn around and continue going in its current trend. Alright, so let's just get into what a key level is. A key level is when a resistance point has been broken, so it's gone above it, and then later it comes back, and then that same resistance now becomes a support, and it bounces off of that and continues going up, for example. And so we'll have a look at this on a real chart. Alright guys, so now we're back on TradingView, and to make this as simple as I can, I'm just going to say a saying that's quite known around the trading world, and it's that ceilings become floors in an uptrend, and floors become ceilings in a downtrend. And so what this means is that, let's have a look. We can see a resistance here, see it hits it and then goes down, hits it, goes down, hits it again here, goes down, and bounces off of this floor. And so this here would be considered the roof or the ceiling, and then later it comes back and hits this resistance, this support here, and so now this resistance has now become a floor. And we can see this happens again over here. We can see that this ceiling gets hit once, twice, and then the ceiling gets broken, and now it's a floor. It gets hit here and then continues its uptrend. And that's simply what a key level is. It's when a resistance like this becomes a support. That's really all it is, and you can find many of these in different pairs. Alright guys, so I don't care if you guys skipped all the way here or if you guys watched the whole video, but now you've made it to the strategy, the whole golden thing of trading, or just the way I do it at least. Anyway, it's a break and retest strategy during an uptrend. And so a break is when the currency, so the candle, actually goes through a resistance or the support. And a retest is when, after it's gone past the resistance or the support, it later comes back to that level and tests it, and if it bounces and continues its trend. Anyway, I'll show you guys what it looks like on a real chart, and then hopefully you guys can get onto trading. Alright guys, so now we are into the strategy and we are onto the real chart. So literally everything that I do on my analysis and all that, I'm literally sharing to you guys for free. Alright, so what I've done is I've identified the whole trend of the market, so I can see it's in a downtrend. Alright, cool, done. Now these big rectangles are kind of just where it's ranging, so I'm just going to delete these now for the video's sake. And also I didn't really need to have that there anyway. Get rid of this one too. Okay, cool. So now I can see that there's a key level here. There was a ceiling, so a resistance here, and then it gets broken here, and then now it's become a floor. So I can see that, alright, this is a key level. I'm going to mark that up on my chart. And then this floor here gets broken, and then now it becomes a ceiling. So it tests this area, it doesn't break the ceiling, and so I entered in, right, for a sell, so I'm going short. And then I just placed my take profit at this previous structure here, because that's where I just assumed it would go. And then I just placed a sell, and that's it. It's just gone straight down, and so that's how you trade it in a downtrend. And so now we'll have a look at what it's like during an uptrend. Alright, so we're going to take a look at USD, JPY, and this chart here is quite a bit more complex, but I reckon you guys can handle it. Okay, so we can just see here it's in a downtrend. I was just marking up some levels here. We can see that it's become a ceiling, and then here now it's a floor, and it continues to be a floor. Anyway, so then we can see here like another ceiling and another floor. Alright, and so let's get into it. So now here we can see a point of reversal. We see this downtrend structure being broken by this uptrend structure. Okay, nice. So you got that. So I've put in this arrow here, so I'm looking for a buy. And then so I'm looking at this area and I can see that there's some resistance forming. And so I looked and I could see that there was resistance, and I marked it up, and then I waited for it to break, and on this retest here it didn't continue to drop. And so I was like, okay, that looks cool, I'm gonna place an enter. And so I entered in this trade on a buy, so I was looking for the market to go up, and I just placed a 20 pip gain on this trade here, and I just took it. And so the reason why I only had a low take profit on this trade is because if we look directly to the left, so all the way here, the market there isn't much market structure for a while until this area here, which is the 10th or the 9th of June. And so I didn't really rely on that market structure, and so I just placed something where I could gain and keep my profits. And then so now here we can see that it's kind of ranging, so it's kind of going sideways here, and so we're just going to wait for this to break out of its trend. Anyway guys, that's going to be it. That's going to be everything you need to know for the video. I mean for Forex. Leave a comment down below if you guys need help with anything, and I'll reply back as soon as I can. See ya!